Let's bring in Michael O'Keefe, Chief Investment Officer at Stifel. Michael, obviously the market's been all over the place. Give us a sense of where we may be going, or what is this indicating to you about where we may be going?
Well, we're at the end of the year. We're seeing a lot of volatility, kind of lighter volumes, and some negative news pushing things around. Our view looking into 2019 is we're up from here through the year. Think of it as high single-digit total return, 9–10%.
The rationale for that is it the fundamental issue, or is it a combination of the notion that maybe all of the headwinds, to a degree, a lot of them are, some of the worst case scenarios are being baked in now?
Baked in. So headwinds, that's a word we use. I think of it this way. There are things that we're going to work through in 2019. We'll see Brexit happen, we believe, with an agreement. We actually think U.S.-China trade, there will be an agreement, though the concessions on both sides. Things like that settling out, and to your point, baked in already, that gives us a little bit of upside.
One wild card would be the Fed. We've seen it roil the markets. We've seen the markets in February go nuts because of what they thought the Fed may do when we saw wages initially going higher. We saw that October 3rd speech from Jay Powell, and then, of course, we've seen a reaction since the last FOMC meeting. The Fed has put more pressure on this market than anything else. And it's still not, we're still not clear, or at least confident, that Jay Powell maybe gets the message.
Yeah, that's right. I think of it this way, that the Fed has been inside. They're kind of academics, right? Data dependent. So they're watching the data.
But isn't that why we were supposed to love Jay Powell?
Well, that's right.
Because he wasn't the classically trained economist. He worked at Carlyle. Yeah. He understands Wall Street and maybe even the implications to Main Street for some of these actions. Yeah,
that's right. But I think the issue for them has been about communication. So they're a little bit slow to sort of signal what's going on. When we look at the market's calling for 0 rate hikes in 2019. Fed's calling now for 2. We're sort of in the middle at 1.
Should Jay Powell, if President Trump requests, meet with the president?
Yes.
Yeah.
Absolutely. I think, and again, I think there's a separation there. It's an important separation. But at the end of the day, the president's job is to sort of rally for the economy, rally for a strong environment for that, and that's what he'll do.
I like what we've seen in the last couple days. I mean, we know there's thin volume out there, and a lot of people aren't around. But the idea that we had that one the biggest point gain,
right,
and then one of the biggest intraday reversals ever, shows a certain amount of resolve. We need to see that, right? This market's got to be tested, and you need those kind of hurdles from time to time. But what struck me yesterday is that materials led the way, industrials led the way. Can we have a market rally without technology leading the way?
Well, again, I think that'll be important. When we look into 2019, we're really looking at still continued earnings growth. And again, prices baked in, some of this stress, we see upside, and we think it'll be broad.
Will it be new leadership, you think, or same leaders?
I think it's more broad.
Okay. Hey, Michael, do me a favor. Stay right there, okay?
Yep.
We just got the latest read on the weekly oil inventory numbers, and David's got the numbers.
Yeah, 46,000 is the drawdown. By the way,
46,000?
46,000. Now, but look what's happening. Oil down a little bit right now. Oil is just down 11 cents, so $44. I mean, if you're looking for any sign at all of an improvement on the world energy front in terms of the U.S. companies and foreign companies using more energy, you're not going to see it today. Oil seems stuck under $45 a barrel.
Michael, I want to ask you about this. Oil initially was thought to be a supply story, more recently thought to be a demand story, perhaps reflecting not only the global economy but ours. What are we to make? This is a huge pullback in crude oil prices.
Yeah, I mean, at the end of the day, it is all about supply and demand. And when we sit there and try to assess where we're going from here, what we know for sure is the likelihood that we're right is very low because demand kicks up, prices will tend to go higher, supply kicks up, and they'll fall. What we tend to do, in addition to thinking about our investments in oil, is to think more broadly about the economy. The idea of oil prices being low isn't all that bad. You've got lower gas prices, for example, for the consumer. A happy consumer right now, and low gas prices helps fuel that. No pun intended.
There is something to be said about the self-correcting nature of the industry. I mean, there's certain levels where you have to, you have to close down the spigots, shut down some of the rigs. I'm not sure that's happening yet, but at some point they have to do this.
Well, and it isn't on and off, right? It's sort of levels of change. So take shale, for example. Lower the sort of the fiscal stress on shale when prices are lower is pretty significant.
The biggest story you think next year, what do you think it would be?
Well, what I like to think is that the biggest stories will be positive stories coming out of what have been the negative stories in 2018. Resolution.
Yeah.
Absolutely.
I love that idea as well. But I also love, to be quite frank with you, are the low expectations.
Yeah.
I love that, we know earnings are going to be lower. Okay. we've got it, check.
Yep.
So there's a lot of room to beat some of these lower expectations.
Well, and again, in some ways it's about the resilience of our country and our economy. We've got a lot of good innovation and again, positive looking forward.
Michael,
Hey.
thank you very much. Great talking to you.
Yes, thank you.